Hello traders. This lesson is another technical analysis lesson. I think we'll talk about charting today, and in particular we'll talk about candlestick charting. Japanese rice trade was kind of a market, it was a commodities market basically, like how we trade pork bellies or orange juice or whatever. Commodities futures. But in the rice market, they came up with a method of charting, and it was called candlesticks. Then a trader by the name of Steve Neeson, he brought candlestick to kind of the English-speaking public in the 90s, and so it's very popular today. You see candlesticks all over. They're kind of really useful charting technique. They have more information, I think, than any other charting technique besides maybe point and figure, but point and figure don't really too popular anymore, and you can't even find a charting software that does it on its own. You kind of have to write your own EA for MetaTrader, which is possible. I have a copy actually that my mentor gave me. But anyway, they're really useful. So let's kind of go over the structure first. So right here you have the white one. I circled the whole thing on accident, but the white one would be considered a bullish candlestick. And as you can see, this is called the real body. This main rectangle right here, it's the main body of this. These are called the shadows. So the end of the shadow right here would be the low. The end of the shadow right here would be the high. The real body is the open and close. And on a bullish candle, the close is at the top and the open's at the bottom. On a bearish candle, it's the opposite. The open's at the top and the close is at the bottom. The reason is obvious because, during that time frame the candle represents, whether it's 5 minutes, 15, an hour. If it's bullish, it closed higher than it opened. If it's bearish, it closed lower than it opened. So the logic makes sense. Now I guess it's gonna be a pretty short video, but that's what makes candlesticks so awesome, is they're not that hard to understand, and they're kind of easy to get hang on to, and they're pretty reliable. I wouldn't use them by themselves, though. Like in the article I wrote, kind of talks about why that is. Anyway, let's see. So these candles are called Marubozu. It's basically price opened here, closed at the very top, and there's no shadows. Because the reason you have a shadow is the price went up and then came back down, or price went down and came back up. It didn't close right there. It opened right here and went up the whole time. This is a very bullish candle. This is the opposite. Price opened right here, went the whole time, the whole 5 minutes, closed right there. Now if you have these two together, whether it's on an uptrend or a downtrend, let's say you have an uptrend, and then you have these right there at it, and that signifies a reversal by itself. I call these railroad tracks. The opposite's true too. Let's say that you have a downtrend and you see these right there. Then it's a reversal signal. Boom. You might have an uptrend. Pretty reliable. They're one of my favorites. That's probably my second favorite formation. My favorite is probably tweezer formations. So as you can see, this is tweezer bottoms. So you have a downtrend, downtrend, downtrend. And what you have is a bearish candle followed by a bullish candle and then downtrend. What happens is price tried to go down, like it still closed lower than it opened, but price tried to go down and then quickly got rejected. and you have this short opening close space, and then the next candle, price opened and then probably went down and got rejected again and then closed higher. These are really reliable. You see these a lot, and if you see them, at a significant level like support and resistance, or I use pivot points a lot on solid numbers like 1.400 or Fibonacci levels, different places like that, or like the measured move, the end of a measured move, which is more kind of, we won't go into it too far. But anyway, any level where you think that price will be rejected, that you find that is like an inflection point in the chart, you see these, it's a pretty good signal. I mean, they're a really powerful overlay. Tweezer tops are the same, but this is the opposite, right? So we have up trend, then you have a white tweezer where price went up and got rejected, and then the opposite, you have a black one got up and got rejected. This next one over here, it's called an engulfing pattern. I didn't do the bullish part, but just imagine how this is inverted. It's the same thing. Just imagine that this candle was black and this one was white. Basically, it's just when you have kind of a solid white candle, or solid, like, see, this is a solid bullish candle with a little shadow at the bottom, but then it's completely engulfed by this huge black candle. It's a pretty good one. Kind of hard to see, and it's pretty subjective. I mean, tweezer tops are tweezer tops. You can't really get too much subjective about that. But these ones are kind of hard to find, for me anyway. I guess there's probably plenty of people that have no trouble doing it, but I struggle with it. This is a triple formation, the evening star, and the morning star is the opposite. If this was inverted, the bullish part would be called the morning star. This single candle right here is actually called a spinning top, and by itself it's neutral, but because you had a huge white Marabozo, I'm not pronouncing that right, I apologize, but this candle right here, solid candle, then you had a spinning top, which kind of indicates indecision in the market, and then boom, there's this huge black candle. It's kind of a sign of a reversal formation. These ones, these single ones, are great, but I wouldn't say they're as reliable as like the tweezer tops and bottoms or the railroad tracks or the evening and morning star. But a shooting star by itself is pretty good, because what does it say? It says that price went up, and then got rejected and closed lower than it started. You have this tiny little zone between open and close, and price went back down. A hammer is basically, it's the same thing, but see how this has a little shadow at the top and this doesn't? Hammers are probably more reliable than shooting stars or hanging men, which is the up. But hammers are pretty awesome. Inverted hammer would be the opposite of this, and it would be at the top of an uptrend, of course. So I guess the general theme with these is that price, I guess one hammers, shoot stars, and tweezer tops, is that price continued in the direction and quickly got rejected, and then there's this tiny zone of open and close. It's a theme of all four of these. So if you look, basically look for shadows that where the shadow is larger than the body. That's a sign of quick price rejection. That's a sign of someone or a group of people or the market itself, however you want to think of it, rejected the price and then went back down. Basically saying, oh, that's enough. Exhaustion. It shows exhaustion, like the momentum is being exhausted. Boom. Market will go back down. It's kind of the common theme of these four. That's why I like them the most. These ones are, like I said, they're pretty subjective, but they're still reliable, and I know a lot of people that can do really well with them. I just can't personally. Maybe you will, or do. Let's see. Like I said, this is gonna be pretty short. We can let's go over to MetaTrader and see if we can find some. Right now I have bars on most things. Let's look for something that's pretty wavy in action. Let's change this to candlesticks. shall we? So, look, tweezer top. Circle these. You know, I'll just do check sign. How about that? Put check sign right there. Let's see. Dun, 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 dun. I know this one doesn't kind of completely look like the railroad tracks I've shown you, but that's kind of annoying. I'm not going to do it like that. I want something easy. It's not going to be easy, is it? I'm just going to copy it, I guess. Control. I said move, boy. Sorry. I usually don't mess with these. That's not going to work either. Just delete them. I'll always have to point to them. Sorry. Delete. But as you can see, tweezer tops. Right here is kind of a railroad formation. These two candles right here. Right here you have a hammer. Price reversed again. Right here you have a hammer with a doji. Price reversed again. Another hammer. Price reversed again. Let's look at Canada, Japan. Let's see. We can find something. These are pretty much tweezer tops right here. I mean, it's pushing it, but it's awesome. Like I said, if you see long shadows, that's pretty prominent of a reversal. And they're not always going to be correct, like I said. And it's easier to go back and find them than to look for them. I think it comes down to trust. Like, you might see something like that, but you're like, oh, I don't know. And then you look back and like, oh yeah, obviously that happened. Let's see. See this level. Let's check why. See if this bounced somewhere else and talk about that idea of overlay again. Turn off this one so I can go back. See, I always do this. I go back and see. Oh, this is a formation that happened earlier I drew. See, these are the type of formations I look. Obviously, this is at a different time frame. I think this is probably an hour. But you see that this is called a propagation trade setup. Similar to an Elliott wave, but it's Goodman. Basically, you have a 1, 2, 3 that becomes a 1, 2, and you trade for the 3. Which was this was a really good setup. If you look, boom, trade for the 3. That's mainly what I trade now. We'll maybe have a short lesson on propagation trade setup. That's a really it's an advanced subject though, and kind of hard to explain in one lesson, but I'll do my best. What I was trying to get at is that you look at this resistance level, the parent more than once. Here, and here, and go back. So there it is right there, 1, 2, 3. So that's actually a triple top. I bet you could see it all in once at 4 hour level. Yeah, I see it. It looks like a double top though in 4 hours, but once, twice. So I'm actually going to be looking to sell the Australian Japan again. And also, you look at this main down move, prices were getting rejected at the 50% mark. 50% is a really significant level. If you ever read anything about the 50% rule and the measured move rule, 50% of any move is important. It's where price will find support and resistance a lot. And then that's a primary level I actually look for when I use Fibonacci anymore, is 50%. But then you gotta do the other way too. Look, see where it bounced from this uptrend. But I'm definitely gonna be looking to sell, even based on that. There's more overlays for the down direction. Because I'll probably look for that today actually for a nice sell. Again, I kind of went off subject for a second, but I hope that this lesson on candlesticks was helpful. The last part was just kind of an introduction to some other concepts, and also, again, the main theme that I'm trying to have in a lot of these videos is using overlays. Don't just use one thing, you know, candlesticks are great, but don't just use candlesticks. But if you have like a propagation trade set up like this with the candlesticks, you know, right here you have an obvious bullish candle on top of the setup. Boom. It's great. And then like if I have it right here, you know, if I have another candlestick that happens, like say on the 15, I gotta remember to push like this. Sorry, I have to go all the way back on myself now. You can tell that candle makes itself. Okay, here we are. See, we're way back in the future now. We're also on a smaller time frame. But now that I had that PTS set up, and I've seen the price is rejected on the same level, and I have a hammer right here. That, you know, that's 4 overlays saying that this is a sell. And I think that, you know, I'm going to keep hammering that idea that you got to have more than one friend on your side, you know, before you go to war. So I think that's about it. I hope you enjoyed it. I hope it was helpful. Sorry about a little bit of rambling and off subject.